Listless, directionless, but not terrible. That's how I would describe the current market conditions. But with that raving market endorsement, let's dive into the analysis and see how things look now after this last week where equities really struggled. Okay, so if we look back over the past week, you can see that all of the equity classes ended the week lower. But what's interesting here is ARK Innovation. If you look at the losses here, ARK Innovation finished just about the best along with the Dow Jones Industrial Average. That doesn't usually happen. NASDAQ actually finished okay. Small caps really kind of suffered here. So this is kind of an odd week for a down week. And if we look back over the past month, you can see that equities again struggled, but here the ARK Innovation and the NASDAQ 100 finished up number 1 and number 2. So this is almost looking healthy. And then if we look at year to date, we still have a very healthy rally with stocks up a very large amount. You've got ARK Innovation up 43%, the NASDAQ 100 up almost 41%. That's insane. S&P 500 almost 17% up. And then Dow Jones and small caps kind of falling in behind there. So very healthy year to date. And then if we look at over the past 5 years, now we are starting to have a pretty healthy looking rally here, although ARK Innovation still has a very long way to go to catch up. And how are the current bottom dynamics looking? Well, we had a very strong bottom forming confirmation here, a bottom confirmation right back here where you can see the bottom confirmation signal, this blue line, was up here right at 100%, and the confidence level was up here at about 96%. So this was a very strong indication, but you can see that this has been faltering. The bottom forming indicator has been going up, but the confidence level's also kind of falling off here. I don't really quite know how to read this. If I were going to do it based just on this chart alone, I'd say we might go higher next week, but there's a lot of other pieces here, and I'm not confident making that prediction, at least not right now. So what else do we have? Well, if we look at risk versus opportunity, you can see that risk acceleration is shooting higher. This red line is shooting higher, but the opportunity level is still above 80 and it's moving higher. So what do you make of this? I don't know. And if we look at the new metrics, just about as confusing. So you've got risk acceleration up here above 60, and heading higher, which is really, really not good. This kind of says, well, we could be in trouble in the coming weeks. You've got risk, the red line, moving higher here. But you've also got opportunity steadily moving higher since way back here. So what do you make of this? I don't know. I'm afraid to say how I feel. And then if we look at equity versus safety in this table, well, you can see that the NASDAQ 100 was back here. It was up there. Now it fell down here, and it fell down here. Then it kind of came back a little bit, stayed there, went right up to number 1, and has stayed there again this week. So that looks really, really healthy, right? Well, what if we look at cash? Well, if we look at cash has been like a yo-yo. Went up here. This was obviously a bad time for the markets back here. In fact, let's just draw this straight across. And then it started to look good. Cash dropped down here, sort of the middle position, which is fairly healthy. Like to see it lower, but that's where it was. And then this last week, it moved up into the number 2 spot. So just as those other indicators were confusing, this looks confusing. And you can also see here that treasuries are in an unhealthy relationship. You have the highest risk treasuries down here at number 9, the next highest risk at 7, next highest at 6, and the least risky at 5. So this is an unhealthy treasury market right now. And how does this show up in the buying and selling pressure? Well, again, it really doesn't look that great. We had a nice little rally here in the Dow, which kind of fell off and it's again tried to go up. But you can see that the buying pressure, this solid gray line, while it was nice here, it has fallen below the selling pressure, and the selling pressure is increasing. That doesn't look good. What about the S&P 500? A nice rally, pullback here. You can see that the buying pressure collapsed along with the pullback, and the selling pressure is increasing and is above the buying pressure. Again, this doesn't look great. What about the NASDAQ 100? Same picture. A little rally here, then we kind of pulled back, and the selling pressure has moved up above the buying pressure. ARK Innovation, same picture. A nice rally here. Buying pressure very nicely above the selling pressure until this past Friday, when the selling pressure really started to shoot up here. And the Russell 2000, just like the other ones, a rally, pullback. You can see that the buying pressure has just collapsed and the selling pressure is moving up higher. So going forward, these indicators really don't look that good. That's why I said if I was just looking at the bottom dynamics, I might be inclined to say there's a chance we could go higher next week. But looking at these are not telling that story. So how about sector rankings? Well, if we look at sector rankings, you can see last week in this top table, we had a very healthy situation here. We had Bitcoin number 1, NASDAQ 100 and technology 2 and 3, semiconductors number 4, consumer discretionary number 5, ARK Innovation up here. And you can see that cash and treasuries and consumer staples were all way down here at the bottom. This looks fabulous. Let's fast forward to this week. Well, we still have the NASDAQ and technology, NASDAQ 100 and technology index up here at number 1 and number 2. Consumer discretionary number 3. Semiconductors are right here. Bitcoin has pulled back a bit, and you'll see that in the price of Bitcoin when we talk about that. But again, cash and consumer staples and treasuries are still all down here at the bottom, even though cash and consumer staples kind of moved up a notch here, which is in the direction you don't want to see them going. So maybe that portends that things are not going to be so good going forward. We'll see. What if we look at the new metric? The new metric of similar picture, you've got Bitcoin up here at number 1. We've got consumer discretionary up here very nicely, NASDAQ 100. What else do we have here? We've got innovation kind of down here in the middle, but again, cash and treasuries down here at the bottom. So this could be better, but it looks pretty good. And then if we go to this week on this bottom table, again, Bitcoin number 1, we've got consumer discretionary falling back a little bit. We've got the NASDAQ 100 falling back a little bit, but cash and consumer staples and treasuries are still all down here, although cash has moved up a notch. And what if we look at sector rank acceleration? Remember, sector rank acceleration kind of moves more quickly, kind of tells you where things might be going rather than where they've been. And if we look at this, last week, Bitcoin was up here at number 1. Let's see, ARK was up here. Where's the NASDAQ 100? NASDAQ 100 was way down here, so that didn't look good. And you've got consumer discretionary here, not terrible. You've got long bonds, treasuries up here ahead of the shorter duration treasuries. So that was looking good for treasuries in terms of sector rank acceleration. Well, how does that move forward to this week? Well, if we look at this week, NASDAQ 100 right in first place. Consumer discretionary has moved up. This is very encouraging. We've got, let's see, what else do we have here? We've got semiconductors here. ARK Innovation has fallen off here and moved down from here to here. And you can see that 20-year treasuries have pulled back a little bit, but cash has moved up. So again, a mixed picture. That's kind of the message this week. Listless, directionalist, mixed picture, not terrible, but not great. So that's what we're seeing. And if we take a look at the new metric, at sector rank acceleration, you can see that last week it was very different from the old metric. The old metric, we had consumer discretionary up here. In the new metric, we have consumer staples up here, cash up here. Again, treasuries look good here, even with this metric. But this is starting to look unhealthy for equities. And if we go to this week, consumer staples and cash have slipped down a notch. Treasuries slipped down a notch, so they look less healthy. And but consumer discretionary actually moved up. So again, a confusing picture here. I don't like the fact that the Dow Jones Industrial Average is way up here. I'd rather see it down here somewhere. I'd rather see the NASDAQ 100 up here and some of the technology indices up here in ARK Innovation, but that's not what we're seeing here. So this is looking somewhat unhealthy going into next week. And how have Treasuries been looking? Well, I've said that they started to look healthy, but now they're not looking so healthy. So here we are. This is over the past 5 days, so over the last week. And you can see that while Treasuries started to try and rally from back here, from the bottom, they kind of came forward, but ended the week in an unhealthy. And how have Treasuries been looking? Well, I've said that they started to look healthy, but now they're not looking so healthy. So here we are. This is over the past 5 days, so over the last week. And you can see that while Treasuries started to try and rally from back here, from the bottom, they kind of came forward, but ended the week in an unhealthy relationship with the highest risk Treasuries, the purple line, down the most, TLT 20-year long bonds next, and then the shorter duration ones up here, but they all ended the week lower. So this doesn't look good. And if we look back over the last month, again, you can see a very choppy situation here, but they have come up off this bottom back here and are up here, but they're still all at a loss for the month. And what about year to date? Well, again, we're coming off this major low here and sort of heading higher, but we're still at bargain prices here. And if we look back over 5 years, you can see that we're actually at the lowest point we've been at in 5 years. And if we go back over all of history, we're back to, kind of in the range of these lows way back here in 2010. So long Treasuries could end up being a really good bargain as long as interest rates don't continue higher. And how's the yield curve looking? Well, I don't know if you remember last week, both the current and 1 month ago were right on top of one another, but now you can see that's changed a little bit. The current yield curve, the longer duration Treasuries have gone higher, which has caused their prices to drop, as you saw before, and it's become a little less inverted than it was a month ago, but not uninverted like it was a year ago, that you can see down here with this blue line. And in terms of the Fed meeting that's coming up in just a couple of weeks, you can see that there's a 92% probability that the Fed will leave interest rates flat. And there's an 8% chance that they'll raise interest rates by 25 basis points or 0.25%. And how does that show up here in this graph of the yield curve inversion? Well, back here in March, which is kind of falling off, we were highly inverted, down 111 basis points. You can see that we bottomed again here, a little bit higher here, and now we're kind of trying to somewhat fight our way back, but a long way to go. I mean, we're still, 73 basis points, almost 0.75% inverted. This has got to go way up here to become uninverted. And that's going to require that the Fed lower rates at the short end, which they control, or the market drives rates higher at the long end, and that'll make bonds fall even more. So no way to tell which way that's going to go, but that's what it's going to take, one or both of those to happen in order for this thing to uninvert. And what is the buying and selling pressure telling us about Treasuries? Well, God, it's just kind of like equities here. You can see we had some rally here. It's kind of pulled back, gone up and gone down. And just like in equities, in the short end anyway, the selling pressure is shooting higher, this orange line. It's above the buying pressure, which is the solid gray line. So this doesn't look good. If we go to intermediate Treasuries, it's a little better. The buying pressure is still above the selling pressure and moving higher, even though the price has been declining. If we go to slightly longer duration Treasuries, 7 to 10 years, you can see that we had similar price action, a rally, a pullback, but the selling pressure is above the buying pressure, even though it's moving lower here. And then if we look at 20-year Treasuries, again, a rally, a pullback, a little bit of a rally here, but the buying pressure has been falling and is currently below the selling pressure, which has been increasing. Now, I don't know if you can see this in the screen, but on Friday, the selling pressure started falling. The buying pressure went up a little bit. Who knows? This could wind back and forth and go sideways for quite a while before we get any kind of a real indication. I feel like I'm afraid. And what about gold? Well, gold's acting like everything else. That's why I say that this is really listless, directionless. There's no confidence anywhere that I can see here. Gold dropped off, rallied just like everything else, pulled back just like everything else. You can see that the selling pressure, this orange line, is shooting higher. It's above the buying pressure. Buying pressure has collapsed just like everything else we've looked at. Maybe there's some hope with Bitcoin. What about Bitcoin? Well, kind of similar here. We had a big spike here when that SEC ruling, the courts ruled on the SEC case. But boy, that didn't last long. And you can see that the buying pressure, while it spiked way up here, fell way off, it collapsed, and the selling pressure has increased. Now, recently on Friday, the selling pressure started to decrease. So again, this looks like everything else. Everything is looking the same. How long can it stay this way? I don't know, but probably not very long. A week ago, I was really hoping the rally would continue, even though that past Friday a week ago was an unhealthy down day, as I showed in my video from last week. This past week, equities meandered and finished in a confusing downward move with absolutely no conviction and no indication of an unhealthy market, which is really strange. This week could be pivotal and could set the direction going forward, but who knows? Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
So you wanna know my name? I hope you got a lot of time. I'm not sure what you've been told, but no one's been a friend of mine. From the day you drove the car to the riverbed, they'd never heard what I've said. So pardon me for acting wise. I know what hides behind those eyes. Where do we go when the fight comes knocking at our door? Where do we hide when they're changing all the reasons why? 91 number of disguises used to cover up the truth about the one I loved and left me back in 91. They say it was the reason he's not here today. You don't care to see behind my pain. So pardon me, I have to run before you're just another one. Where do we go when the fight comes knocking at our door? Where do we hide when they're changing all the reasons why? Where do we stand when the lies feel like a rubber band? Where do we run when there's no one there to grab the gun? When the fight comes knocking at our door, where do we hide